Today is November 28th, and Ethereum has just reclaimed the $3,000 level after briefly dipping below it overnight. At the time of recording, ETH is trading around $3,020 to $3,080, showing relative strength while the broader market remains quiet. Three major catalysts are converging over the next 7 days, and their combined impact could determine whether Ethereum enters a new bullish phase or faces another sharp correction. First, in less than 6 hours from now, Deribit will settle more than $16 billion in Bitcoin and Ethereum options at 8 o'clock Coordinated Universal Time. This is one of the largest quarterly expiries ever recorded. The current options skew is bearish, with a higher volume of puts than calls, and the max pain price sits right at $3,000. History shows that once such large expiries pass, volatility tends to drop and we often see a relief move in the direction of the prevailing trend. Given the bearish skew, a post-expiry bounce above $3,000 would not be surprising. Second, on December 3rd, just 5 days away, Ethereum activates the Fusaka hard fork. This upgrade combines the Fulu consensus layer changes and the Osaka execution layer changes. The main upgrades are pretty straightforward. First, Peer DAS, which makes data verification and distribution much more efficient. Then, a gradual increase in data blocks, which should push Layer 2 fees down by another 40 to 90% by early January. Ethereum is also doubling the Layer 1 gas limit, and adding native support for SECP 256R1 signatures. In simple terms, this means you'll soon be able to sign transactions on your iPhone using Face ID or Touch ID. In short, Fusaka is the most significant scalability and usability upgrade since Denkun, and past upgrades of this magnitude have consistently led to increased on-chain activity and positive medium-term price action. Third, institutional adoption continues at an accelerating pace. US spot Ethereum ETFs saw another $150 million of net inflows last week, pushing year-to-date inflows above $2 billion. Coinbase custody data shows a 15% month-over-month increase in institutionally held ETH, and perhaps most interestingly, the Kingdom of Bhutan has quietly accumulated a position now valued at well over $800 million, with Ethereum forming a major part of that sovereign portfolio. On the technical side, ETH has defended the $2,900 to $3,000 zone multiple times and is now testing resistance between $3,070 and $3,080. A weekly close above that area would invalidate the near-term bearish structure and open the path toward $3,250 and eventually $3,400 to $3,500. Failure to hold $3,000 after today's expiry, however, could see a quick move back toward $2,800. Longer-term metrics remain constructive. Exchange reserves are at multi-year lows. Whale wallets added roughly 50,000 ETH over the past week. Layer 2 TVL stands at $43.3 billion, up 37% year-over-year. And Layer 2 networks now process nearly 60% of all Ethereum ecosystem transactions. In summary, the next 7 days represent one of the highest conviction setups Ethereum has faced all year. A successful defense of $3,000, combined with the removal of options overhang and the Fusaka catalyst, could easily propel ETH toward $3,800 to $4,000 before year-end. The risk is clearly defined on the downside, and the reward appears asymmetric to the upside. I will be watching today's expiry and the weekly close very closely and will update you as soon as we have clarity. If you found this analysis useful, please consider giving the video a like, leaving a comment with your own price target, and subscribing to the channel so you don't miss the follow-up. Thank you for watching, and I'll see you in the next one.